Hello traders, Gary Wagner for Trending Markets, quarter to 11 in Honolulu, quarter to 5 in New York on Wednesday, 16th day of September 2015. We do have Dow Jones Industrial Average, the equities markets in the U.S. as a whole, reacting in a positive manner to the onset or start of this month's FOMC meeting. Of course, we'll get some sort of an announcement or word tomorrow whether or not they are going to begin to hike or raise interest rates starting this month, or whether it'll be next month, or give us some indication of when that might happen. We could see this market continue to really surge should they postpone that, and I believe that that is the sentiment that we are currently seeing. When we look at a weekly chart, let's go ahead and pull that up, and this, of course, is the Dow Jones Industrial Average. We have been talking over the last couple of weeks about a particular candle type that has been so effective in really predicting potential end of corrections in the market, and it's this hammer type candle right in here. You can see it here. Of course, on these occasions we had a much shallower correction than we did on this last correction, which was, of course, a full 10%. But more importantly, look at the length or the low that we hit. Tremendous move down. But the next week we had something happen that was quite different than all of the other occasions, and that's this red candle. Because if you look at any other occasion, that hammer was followed by some sort of a green candle. And when I say some sort, I mean relative to the size. Here it's a small bodied, here and here you've got a large body. However, now we have not only this week, or last week, but this week, moving to higher ground. Most importantly, we have broken above the former close on this week, open on this week, and that to me is very, very significant. We talked about the fact that when we looked at a daily chart, let's go ahead and pull that up, we could identify really a wedge or a compression triangle. And the way that we were looking at it, we talked about this for the last couple of days, was an ascending bottom and a flat top. It was my belief that we would, as we approach the apex, there'll be a release of energy, and that release will be to the upside. So we are looking at a point in which it is safe to enter the E-mini Standard & Poor's from the long side. Currently at 16,739, you can go ahead, initiate positions. We'll look for stops, but in terms of stop placement, because of the excessive range you'll see in this market, even putting it at 16,365, which would be obviously too wide of a stop. Again, this is only a daily chart. Even if we look at the lows of today, they are at around 590. So we've had a tremendous move. Now, we, of course, will put that on with the S&Ps, and let's go ahead and pull up a daily chart for that. And so in terms of where the market is, it's at 1988. You can enter at the market, go long, but in terms of your stop, you're really going to have to at least cover about 20 points to 25 points, because you need to have it below 1960. We'll talk about more of that tomorrow. Now, to the news that I'm not very happy about, crude oil surging today. 47.15 did stop us out of our trade, short at 44.15, stop at 46.50, so it did knock us out with about a $2 loss. Of the last 3 oil trades we've done, now we have 2 that have been profitable, and this one that has given us a drawdown. This has not been a good day for trades in either oil or gold. I am not happy to report this, but it is my obligation and duty. The one thing that I will make a commitment and promise to you is that I will do everything I can within my power, make sure that our next trade is a profitable one. This has been Gary Wagner for Trending Markets. We'll talk to you tomorrow, the day they release some information from the most current FOMC meeting. Bye-bye.